Good afternoon, everybody, and welcome back to our StockTwits Q&A forum. I'm Brittany Umar. I'm going to be joined by Scott Redler in just a minute, but before that, we're going to show you a quick video. It's a sneak peek into Scott's trading world, so check this out. We'll be right back.
I'm in a little MGM and I'm still in OIH. I bought it this morning at 107.50.
Apple's good.
You don't buy in the first 5 minutes of the day.
I live in Jersey City. I was born in Long Island. Went to school at SUNY Albany. As a firm, we are 5 partners, and I'm one of them. I am the strategist that puts the game plan together for about 400 traders. I kind of command that army. What's going to make us money with that is on a day like today, if it's up or down 3 handles, that's when you see where other money is really getting put to work, and that's where the action is. You held 1,600 the whole time?
I got 1,000.
See, that's a growing experience for you, brother. All of the traders trade our money, so they have to be right. They have to say, okay, I think Apple's going from 260 to 265, and if they're right, they make money. It's a good setup. Stick with the win.
Okay.
It's the right trade. Don't watch it so close. Relax.
Scott's coming on in a minute, so we're going to listen to Scott.
Scott, technicals first. Market looks good. Volume seems a little light. What do you see?
Right now, the market's behaving very well technically.
Let's talk to this guy. Now, here's a guy, Scott Redler, who does nothing but technical analysis, but puts his money where his mouth is because he's got a firm and his partners put their money in every day and trade on technical analysis.
I'm not looking for a home run. It's not a get-rich-quick scheme. If I'm able to pick the direction of the market, I could book a winning trade and I could provide for my family.
Where's the breakout? That is the next evolution.
Good afternoon, Scott Redler, T3 Live. Welcome to today's Q&A with Red Dog and Brittany, and where we're going to be answering your questions about strategies, answering your questions about the stock market, about lifestyle. Anything you want to ask us, we will try and answer to the best of our ability. We are here, we are human, we try and read your names off of the chat forum, and some of them are definitely a little interesting. So if we massacre them, don't take it personally. Just be happy that we chose it because we want to try and get in as many questions as possible. So we're just going to start right away. So I want Brittany to come off and just let it roll.
All right, well, let's start things off with one from Chart Girl. We know you send them in pretty often. We'll start with yours asking, do you think the 1343 low holds in the S&P going forward? Are you going long versus that level?
Well, I try and be a technical trader and a technical strategist, and I try not to be I try and be objective and not read the headlines too much, but it just feels like recently the fundamentals and the structured system that it feels like has broken down has combined now with the technical action. And I know last year everyone's saying sell and may and go away, the year before the same thing, and rightly so. There were problems then and there are problems now. If you recall 2 years ago, we were down I think 17% off the highs during the same time frame. And last year we were down 22% off the highs. So far, if you put 1343 on the map where we bottomed yesterday, that was I think about 5 to 6% off the highs. So to me, I'm not very confident that holds because I just think that the more I read and the more I see what's going on and the rhetoric you hear out of Greece, the more that the elections took place in France where now they're going from deficit reduction to potentially fighting the system or not following through on what we thought would transpire. I think there's just going to be so much back and forth action and so many headlines. And with the technical action that I see, I think we head lower. And if you look at the chart of the S&P, you will see that you line it up here. It all depends on your time frame. And we've talked about this chart many times. We've talked about it since October. We've been in this uptrend. And if you look going forward, we were in this uptrend, and right here, we broke it. So this is one of your signals to get out of the way if you trade trends on an intermediate basis. We came in, we hit this area here. This area was 1357, which also kind of aligned with this prior low, in this symmetrical way. Came back up, somewhat retested, put a lower high in. And for those of you that are members of my site, I was talking about this 1390 area right here. If you look right here, I was like, you know what? There might be, we might be able to go higher. This was before the elections. This was before last week's jobs data that consistently showed a little weakening in the U.S. economy as well. And then all of a sudden, at this point, you also saw the Dow at highs. So right away, I think I was on Bloomberg that day, and I'm like, you know what? The Dow is at new highs, and if you look on that day, the spiders weren't even close or didn't attempt to go through. And if you look on that day, which was also May 1st, look at the Qs. The Qs were here. So the Qs made a much lower high. So right away, I was just thinking, and I said, it's a faulty signal that the Dow is making highs. Typically, traders like to see tech leading the way. You like to see the Russell leading the way. Even the S&P is better than the Dow. So right there, that put me on a little bit more, caution tone. So if you go back to the S&P, you will see that here you go. I was talking right before I left for the Bahamas that if we break 1390, 1392, I'm going to stop myself out of my positions because you no longer warrant what was, the start of what could have been a new move through highs. So right there, once we broke, that was your signal to get out. So fast forward, here we are. This low yesterday was 1343, which is what you stated. If you look at this macro pattern, and I know it's sloppy, this is a head and shoulders top pattern, which is a distribution pattern. That was the left shoulder. Here's your head. Okay, here's your right shoulder that pierced a little higher than people want, but at this stage of the game, you have all these computers out there. You have a lot of people that actually become, to me, program against technical analysis. So some of these patterns change a little bit, that you have to have zones where you have to be a little bit loose because the computers know where your stops are if you're short, so they usually run them through to make you cover and get out, which you saw on one of those days in that upper range. Same way at support, they like to break it below, steal your stock if that's what you're long against, and rally a little bit before you could resume that trend. So at this particular point, you go back to the chart, you see this pattern here. If this head and shoulders pattern is valid, which I think it is, and if you look at the top here of about 1420 down to about 1360, if you look right there, that's about 60 handles, and what patterns do is they measure distance. So from 1420 down to about 1360, that's 60 handles. So that really takes you down to right around here, which is about 1300. So along the way, there'll be points of reference to watch, this being one of them. This is around 1322. So I do think that before you put any macro money to work, that we will see 1300 to 1322. So for now, obviously, this is the short-term point to trade against, 1343, and we could see a little bit more of an oversold bounce, but the longer we stay below this 1380 area, I think the higher the probability we take this out and we head to this lower area, and that's where I think potentially more macro money should be put to work.
I think that'll help a lot of people in recognizing the pattern and knowing those key levels. But level 2 has a question saying, hey, Red Dog, huge fan, but saying he's not recognizing the intraday setups in this tape. So how do you change your mindset?
Well, the last 2 days prior was a great example of that, because if I talked to everyone in the community, I'm like, the first point of reference was over the top of my head, which I'll go to the chart, was 135.76. And those of you who are on the site, I said if we break below 135.76, that's the pivot to trade against. It's probably a good short. But if we come back above it, maybe we play for a cash flow long. For 2 days in a row, that worked. So if you go to the chart to look at playing against pivot points, this was the big level. Okay, I talked about it going across. This low here was 1358. This low here was 1357. So on this day, if you remember, we came all the way from 1400. So right there, the first thing that we're going to do is probably stop people out and try and reverse it. So, on that day, I think we were short, and you had a nice move down to as low as 1347, so about 10 handles. And then we closed at 1363, so, a decent rally. And then the next day we did the same thing. Okay, then this was the pivot, 1347. So here was 1357, then the next day 1347 was the pivot that I tweeted about, saying, this time I don't think we're going to get a good short below it, but I'm going to look for a long. So this day we went as low as 1343. You can read it on the Quotron, okay, and we went back above the 1347. So if you go to the spiders, which I'll show you because I trade it all the time, not a lot of you trade futures, so I want to show you here. I'll open it up a little bit. Here is where we traded below this pivot. This pivot was 134.92. This pivot was 134.49. So once we went up below, some guys probably tried to short it, but I thought that was a little tough considering the move that we had from here to here into the 100-day moving average. So I waited. I didn't short it like I did the prior day. So on this one, when it went back above 134.92, I said, now's your time to buy it on this low. put your stop at today's low. So right there, you have like a 50-cent risk-reward ratio. So you're risking 50 cents in the spiders in a situation that just came down probably about 8 points or so, or a few points even more recently. And then yesterday we closed at 135.74, which was about 80 cents above. So it was a 2-to-1 ratio, and if you timed it even better, it went as high as 135.61. So both these days, it didn't matter whether you were a bull or a bear. You could have used this pivot as your short or long line in the sand, and on this day you could have done this one. And then today was even a different case where I know a lot of us went out long overnight just because I felt like we had 5 gap downs. It was time. You could have used the tier system as well. And I think there was another question based on today's.
Yes, exactly. Speaking of the tier system, Don in Atlanta was asking, when you trade for cash flow intraday, is your first initial buy a tier 1, 2, or 3?
It's usually a tier 1. Usually tier 1 means I like it. I think I can make money with it. There's a pattern there. But usually tier 2 or tier 3 means I'm very confident and I want to trade through a cash flow level in order to make additional money and then stick with the trade. So yesterday, just to let you know, to give you a little inside my head of how I deal with overnight trades, I tweeted and on the chat room I was talking about on the virtual trade floor that I was long, tier 1.5, almost tier 2 overnight. And I just had I guess a gut feeling that, if we open down, we've been going close to flat, I could trade out of it, but I think that it's time for a bounce because this was the first time we didn't close on our highs and didn't bait people in, but that's just, my little Jedi mind tricks that I know since my 14 years or 15 years in the business. So the way I deal with it is I came in today, did the morning call, came out, and the spiders were, I think, off the top of my head, 136.5, up 80 cents. So right away, I would just say, let's just use round numbers. I was long just say 5,000, which could be more, could be less. So right there, above 136.50, if I'm long 5,000 shares, 90 cents pre-market, you sell half. Say, okay, this was my overnight. I'm getting paid for taking the risk. I'm going to sell half. I want to see what the composure of the day was. So if you go to the chart now, okay, you will see that you go to just say the 3-minute chart from the open. Okay, let's get over there. So right away, I was already out of half. So just say now I'm down to 2,500. So at this particular point, I wanted to let it sift out. It went up a little bit, went up to 136.80. So I was down to just say 1,500. I think I tweeted saying I'm out of like 75% of my overnight long. But then I held some. So what you want to do is you want to wait for a pivot low. So the market came in, instead of buying the open, you let it come in. Here is where it looked like it bottomed out. So people on my chat room, I said, you know what, I'm adding a little bit back to get back to about 50% of what I had, right around 136.40. And then it came back up and I took that off. So I was back down to the 1,500. So now I made decent money on half of it, or the top 75%. Then I held some and I made additional cash flow because I said, what happens if I wasn't long overnight? How do I play it? I don't buy a gap open. Some guys are going to try and short it. So see where we come into. And once we put in this little tail here and we start heading up, that's your buy price. So I tried to imagine as if I didn't have any long, and I did still after taking some cash flow off. Sold some back to just say, 1,000 left over, as I was going to do as a trailer. And then I said, I'm either going to sell some above 137 because my target was like 137.50, or if we break the pivot low that was put in place right here, 136.40. I think we wrote about it in our blog also. So that last trail of 1,000 long from 5,000 overnight, here was my out, and I got out. And I said that was it for the trade. So I booked some, took a little intraday trade, booked some, and then trailed some, and you know what? The rest of it didn't work, so I got out, and then really the rest of the day was really noisy, where it just did nothing and closed near the lows of the day. And at this particular point, with the market still proving that you could buy it in the hole, but anytime the market's up, they're selling it versus buying it because it wasn't able to break and hold above this pivot. But again, this is real resistance, and this is your line in the sand. But right now, again, you could cover into weakness, not short it, and you could buy into weakness and sell it into the strength.
Well, while we're on this topic, just as a general follow-up to this one, Lars 2011 asks, how do you use different time frames to identify and manage a trade?
Well, it's different for everyone. Like a lot of people are trying to stay short, thinking, okay, Red Dog, you're saying 1,300 to 1,320 should happen, so why aren't you just net short, adding on every uptick? Because you know what, for me, being in the media, not being by my desk, and that's not my style, I don't have to. But there are guys that manage a lot of money that follow us that say, you know what, I don't care what happens intraday. I don't care about this back and forth trade on the news. We're only 5-6% off the highs. We're going to go down 8-9%. So every uptick I'm going to short. My line is I'm going to be covering below 13.25, but that's somewhat of an opinion. Okay, it's a high probability of that taking place, but that's a risky trade. There are a lot of guys that have opinions, and maybe they even, if you look at the chart of the spiders here, okay, if you go back, go to your daily chart, there could have been a lot of people, because I know a lot of people on the Twitter stream or whatnot, when we crossed above this 1370, which was the old high or something like that. I don't know actually where was it. It was I think maybe right around here. Okay, actually. When we traded above this area, people were short into this, and they added through that, and they might not have been able to hold during this move. So they didn't time it right. They didn't wait for this to break. They didn't wait for this little accelerated uptrend to break. So you could have had a fundamental thesis saying there's no way that we could, continue higher with all the problems going on, but the market didn't recognize it yet. So you might have got squeezed out for what could have been a very profitable trade. So if you're saying to yourself right now that there's no way this market's taking out these highs, we're going down to where Red Dog says we're going to go down to this 132-ish area, and then you better be prepared that you're going to be holding into some pain. And if something happens where Greece puts in the new government or some kind of crazy stimulus and they happen to squeeze, you're going to have some risk on. But with risk is reward. So if you cost average in, there you go, because there are a lot of guys that wanted to be shorted on these down opens and got squeezed both times. So their whole their whole thought process is to be short, but the trading hasn't been conducive to them staying short. So you have to know what you can handle, what you're looking at, what your time frame is. And for me, even though someone's like, what would you do if a gun was to your head right now, gun to head, make a decision, short 100,000 spiders or buy 100,000 spiders, I would say short them here for a move to 132 and beat me 137.5 is where I would cover.
All right, well, let's turn to Cisco because it's been in the headlines since its earnings. Some people out there saying it's irrelevant. Dieter Trader saying, what do you think of Cisco's earnings report? Can the market shrug it off, or will it continue to weigh?
Well, the market didn't shrug it off today. It came out with its headlines, it came out with its earnings, it was down like 10%, and it wasn't like it was pricing in a phenomenal report. And I think you have to read between the lines, because on TV, everyone was saying Cisco is not a market leader anymore. It's had its day, it doesn't mean anything. But if you really read into the report, just to show you again why I think that 1343 doesn't hold, is they had a lot of weakness out of Europe. So any of these companies exposed to Europe, with them slowing down, which are going to slow down, and it could last a long time, are going to order less goods and services, or the public sector that's not going to have the funding to buy things are going to also order less. It's going to have an effect on some of the companies here, which, so you have one-fold, Europe slowing, two-fold. Here, if you recall, we're also trying to reduce our deficit. We're trying to, reel in government, which we have to do in order to not turn into Europe. So that means public cutbacks. That means less money flowing, and that means less ordering. And Cisco was prone to both of them, Europe and the public sector, and both of them made the quarter fall short. And if you look at Cisco, the street didn't give it a pass. The street said, you know what, we're not pricing it in. It's not going to just last a quarter or so. And it closed in the dead lows of the day. And now look at the size of this gap. And it's not like Cisco was trading near the highs and everyone was expecting a robust, huge quarter. It came from 21 all the way down to almost a 200-day before this report. So obviously, if other companies fall underneath the same scenario, they might not get a trap. So all in all, what I'm trying to say is we're not immune to everything going on. We might not be the dirtiest shirt in a laundry drawer, but again, we're not going to be smelling great hanging out in a drawer full of a few week old clothes that is dungy and wet. So anyway, it just goes to show you that we are prone. And again, I think that if you're going to put new money to work, you don't have to do it here, because Cisco's earnings do mean something. They have tentacles everywhere. Oh, you know what a lot of people said too? Oh, you know what? The smaller, more nimble companies are stealing their lunch. That's why their earnings were down. If that was the case, why would Juniper, who's in that group, who's considered more quick and nimble, why would this one have closed in the dead lows also? This pattern here looks like crap. Look where this is. Hold on, let me show you. Below, below all the moving averages, near the lows of the day, near the lows of of this entire move. So right away, they weren't rewarding Cisco. I mean, Juniper saying, we think Juniper is taking, Cisco's lunch because it would have been up because they would have thought the earnings were going there. So that just means the earnings might not be going anywhere.
All right, well, keep firing in those questions, guys. We're going to dive into a whole lot more. We just have to take a quick break. We'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders to understand how to develop an edge in the markets so you can put your money to work with confidence. The T3 Live approach includes a mix of training, trading, and technology to help you learn to recognize, adapt, and ultimately take advantage of different market conditions. So what actually separates T3 Live from other educational firms? For one, transparency. We show all of our positions live, so there's no smoke and mirrors. Basically, we put our money where our mouth is. We have to because we're regulated by the SEC and the Chicago Board of Exchange. Number two, we're real traders. You'll be learning from real professional traders that make a living trading their own proprietary trading accounts, not just instructors that don't trade. Your goal should be to associate and learn from big traders who can teach you how to take your trading to the next level. And three, credibility. Millions of people turn to places like CNBC, Wall Street Journal, Fox Business News, and these outlets actually look to T3 Live for information. No other educational firms are asked to be a consistent contributor. We at T3 Live would like to get you started with a step-by-step method that has been proven over time. The same blueprint for success that I've gone through. It's not a weekend seminar, it's an approach, a mindset, a process to show you how to take control of your financial future. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our Foundation 30-day online home study course. The reason I'm willing to give you such a valuable course for free is I'm sure that once you complete the program, you'll want to continue your education with our team. All you have to do is fill in your name, email address, and I'll see you on the other side.
Welcome back to our Q&A forum. You guys are sending in lots of great questions. Keep them coming. First, we're going to dive into Facebook. We're getting a lot of questions about Facebook right now. Scott, we've got one from Mund F Money. That's a good one. Saying, Scott, do you think Facebook will live up to all the hype, or is it priced in? And a follow-up, do you think it'll be the spark the market needs?
There were three questions in there. All right, first of all, I think it was valued way too high, and the underwriters know that. They were being a little bit too piggy. They issued too many shares. They were way too high of a valuation. I think that the secondary market, people were getting stock at 31 to 38, already valuing it at I think almost 40 to 45 billion. So the talk is that it should open up between 70 to 80, which would make it a $100 billion valuation. And you've seen some of the metrics coming out in the disclosures where it doesn't live up to that. And right now, I think there's a lot of people a little worried that the supply and demand better be there, otherwise it's not going to live up to the expectations. So as far as Facebook, guys like us, guys like you, I talk about the art of the first day of trading all the time on how whether or not we can make money after the IPO opens up. So with that said, I'm going to do a video probably the day before. Sperling, he goes all over these things. He goes with it really, really, quickly. For me, I'm a little risk averse, but I do trade it, but there's an art to trading it. So just giving you hypotheticals off the top of my head of where it opens, or I'll talk about LinkedIn twofold, okay? First, remember when LinkedIn opened up? Okay, I remember it like it was clockwork because LinkedIn was a hot issue. Everyone was, saying this is gonna be great. It's gonna, lead Facebook the whole 9 yards. And I remember it followed perfectly the art of the first day, where I believe it opened up. The first print was like 90, 91, and then it traded down to like 86. Because what happens in the first 15 minutes to 30 minutes sometimes, everyone that, you're not supposed to short an IPO, but you can. You're not supposed to be able to sell new issue shares, but people figure out how to do it. So in the first 15 to 30 minutes, there's a lot of supply, so it hits the stock, hits the stock, hits the stock, hits the stock. So what you need to do is you need to figure out if there's demand there, if it's worthy of a trade that first, second, or even third day. So I remember within the first 30 minutes of trading, it went from like 90-ish or 91, or I think it could have been even 88. There was a 92 print, but really went below to 86, and 88 was a level. So it went down to 86, traded off that level back to like 87, 88. So your first trade in LinkedIn was buy a little bit at 88, the pivot low is 86, and as long as it holds above 86, you stay with it. That means there's some demand there. Some of the supply was subtracted from the issue. And then what you really want to see happen is you want to see it get above the opening print. You want to see it get above the area where, you know, the first block went off. And that I remember was either 88 or 92. So once it starts getting above that 91, 92, guys went after it, and the stock went from like 92 to 100, stayed at 100, went to like 118 that day. It was an unbelievable, you know, new issue for day traders to trade. Not everyone's going to go like that, but what you do is you wait for that opening print, you write it down right away. You say, okay, Facebook just opened up at 80 bucks. Okay, watch, don't buy at that first opening print. Okay, sometimes it goes from like 80 to 82 and then comes down to like just say 76. Then it bounces up to 78. You buy 78, you stop at 76, because sometimes it never gets back above that opening print. They opened it too high to short it, and again, the underwriters were piggies, and then, you know, you're in at 78, it breaks 76, you get out of the way. But if it holds 78, then it starts getting above that opening print of 80, you add a little bit, let it hover, go sideways, and then once it goes above that quick high of 82, maybe it goes to 85, 87, and you just caught yourself a great calculated trade in Facebook if you didn't have the new issue. Now, as far as will it spark to market, will it be the holy grail, people have been talking about that for months. People have been saying, you have to own Zynga into Facebook because it's going to be 20 bucks. You have to own Pandora, you have to own Yelp, you have to own all these things. And a lot of guys lost a lot of money because they had concepts, or we call them thesis type plays. This has to happen, and they didn't listen to the technicals. So if you look at something like Zynga, I remember, you know, being involved, and here, I could actually show you the whole concept here of a new issue trade. Here, it was crap, okay? It did absolutely nothing that first day, wasn't even worth your time. Took a lot of time to figure out and regroup and get into some safe hands here. This was your first buy. So just say if this was the first, you know, 30 minutes of the trade in the new issue, just say it opened up here. This is the way I would have traded it. Just say if this is a day of, okay, you don't touch it, it comes back down. Okay, just say it went to 8, which would have been a lot. And then it came back up. Right here, I would say, you know what? Get long a little Zynga at 10, put your stop in at 8, you have a good risk reward of $2. Then it comes up a little bit longer or a little bit more. Then I would say you could, you know, trade it through this descending trend line, or once it breaks the opening print, which you wound up doing 2 months later, but if this was a day, this was your add-on buy once it went above this 1150, and then from 1150, you had a clean move all the way as high as, you know, 13 bucks. So those were your entries in Zynga. Entry 1, entry 2, entry 3, nice move. Then look here, shooting star top. A lot of guys try to avoid this, like, oh, look at this, in March, it's already here at $15. It's gonna, you know, Facebook's not for another 3 months. Let me stay involved. P.S. That was a blaring shooting stop top. I know some of us were long here, we sold some, but, you know, we tried to hold it, but then once it broke this wedge, some guys didn't listen to the technicals and just stayed with it and said, I'm gonna wait, I'm gonna wait, I'm gonna wait. And then you had another, then it announced that secondary, remember, the $12 price. Once it broke the $12 price, or $12.20, it tried to hold it, I remember, couldn't get back into the wedge, broke this, you know, $12.20, I remember being long, I got stopped out, tried it again here, because I'm like, you know what, Zynga's now at $11.50, it's supposed to be 20, that's what every sales trader in America says going to Facebook, pow, broke again, so that was your out. So if you used your stops and used your tactics, you were out of this thing $11.50, and now look where it is. It's all the way down to, what is this, I don't know, 7 and change. Meanwhile, on earnings day, it got upgraded 3 times, couldn't hold it. The last 3 days, it got upgraded, still selling. So it goes to show you that you only have a thesis if the market confirms it. Everyone's talking about what Facebook will do to the market. You know what? A week away is a long time, especially in this type of tape. So let's revisit Facebook Thursday, Friday, and we'll go over the art of the first day, and then we'll see what effect it has on the market. And if we're oversold enough, maybe it'll be positive. But if they rally it into it, maybe that'll be sell the news. So a lot to consider between now and then.
Now, you mentioned LinkedIn as an example there. So Fuentesa has a follow-up to that. What are solid entry points for LinkedIn if the SPX is heading to 1320?
Well, I think LinkedIn's been acting better. The earnings report was an exhaustion gap. Okay, we've traded LinkedIn a few different times. Goldman Sachs came and upgraded it, actually ruined some of the trade for us. Remember, we were looking at 95, 96, but that was, you know, it wound up opening above it, came back to it, tested, and that was a good buy. Then it ran into earnings and failed at resistance at 120. So now if you look at the chart of LinkedIn, you will see it's still holding higher, excuse me. It's following a lot of my rules where It's above all these moving averages. It's above the 100, the 200. I believe this is the 50-day. It's down on 100. It's above that. So to me, technically, this is acting well. And I don't think that this is, this is not Facebook's ugly stepbrother or sister anymore, which people were calling it way back when. I think that they've started to develop a viable business that people are proud of. They have, their HR department, they have their job seeking department, they have advertising. So PS, you want to take a closer look. On a macro level, I don't think that many momentum traders are going to start getting excited until it starts to clear this high here. Okay, this high here is about 120.63 and this is 122. But if you're holding it, for a longer term play, I would say stay in tier 1 as long as it doesn't violate this uptrend. So if you want to take a closer look at that, stay involved. It's, today wasn't a great day, but I don't think anything had a great day. I would say, if you risk, if you want to hold a tier 1, I would say stay in tier 1. But if it were to break below 101.50, which was that day I remember, which was a very volatile day, that would be a day that you might want to get out and reconsider, because then you could see a move to where the earnings held. Remember this earnings play? I would say all in all, if you're in it for a macro play, unless it breaks below 96, stay involved. You're going to have to wait and there'll be some noise here, but stay involved, tier 1, as long as it stays above this earnings gap, or this Goldman Sachs upgrade gap, because I think it's acting technically well and I think it has, a bigger future here. But I guess if Facebook is a complete bomb and the market falls apart, everything goes down with it, so there'll be a better re-entry. So know your time frame.
All right, what about a stock like Netflix? We just had one from Vikas, and of course my computer needs to refresh, so I just lost his question. But he was asking, he seems to be finding support in the 72 range, so he was asking your thoughts on Netflix right now.
It goes to show you how you need to time these things. People say you can't time the market. We say you have to. And in January, I think Netflix was almost every other word out of my mouth. Rightly so. There was a lot of action. There was a pent-up chart pattern. And it was probably in my top 6 stocks that I traded every single day until it peaked. If you look here, why? You go to the chart, you will see that you had this nice tight pattern with a huge short interest, all the way down here. This was right in this 70 area. This was right when it was getting really tight. And obviously this was also after a move down from what was 300 or so. So this stock was 300 and change, got battered and bruised and crushed. So one man's trash is another treasure. So for me, I'm like, you know what? I think at some point, Netflix fills this gap back up to 110, and then right here it ignited. And if you go here and put in some volume, basic studies, go to your volume, you will see that on that day, there was very heavy volume, okay, and I broke it out. So right there, that was my way in. Then it flagged. I think I was on Bloomberg this day saying Netflix can get to 110, 120, and it kept going, okay. It was a great trade. It was trading well methodically, and then all of a sudden here you had that red dog reversal, which we talked about, which is a reversal pattern right there, okay. This was a short-term sell signal. This one wasn't extreme, didn't really amount to much. This one did. Okay, traded through this 130.60, went as high as 133.43. That was your sell signal. That was your saying, okay, maybe this has changed from from 75 to 130, and then you had this wide range bar right here that confirmed this topping pattern, and then since then, it's made a round trip all the way back down to 72. I don't see anything so compelling here for an investment. I think if you wanted to play for what could be takeover chatter or something, I'd rather, down here at 70 and change is okay. Maybe if you want to be real risk averse, trade it long versus this little pivot here. This little pivot here is 70.58. But to me, it's a day trading vehicle now. It's not an investment. Maybe it'll ignite, it'll act a little bit better. But if you're trading for a takeover, just be aware that people have been trading RIM for a takeover since 30 bucks. It's 11 and change. People have been trading Yahoo for a takeover since 25. It's 15. Remember Palm? People were trading for a takeover in the teens. It got taken over at 4. I think it's 7. So have a different reason whether you're going to play it. I would trade it a level versus a level. Right now it's a broken stock. I would just trade it unless you really think, you could put it away and have the risk tolerance, but I don't see it yet.
Now, what do you see with Priceline? Because we have Leveco asking if you think Priceline's ready for a fall, what you think of it after earnings.
I think that it got battered and bruised on earnings. I think what you have to do now is give it a little bit of time. Same way on a good earnings, you want to let it sift out before it can go higher. Now on Priceline today, I think guys made some money short, but it was a crowded trade. I would say give it a little bit of time. You can definitely draw a few lines here. Let's see, where is Priceline? Is this where Priceline closed today? Yep. Let's go to the daily chart. There was a bigger hole in that chart, I thought. So anyway, it did close. What's today's date? Let's make sure that this is the bar and it's not. Yeah, May 10th. Okay, it closed at 681.11 with the low of the day at 680 near the lows. If it gapped up tomorrow, I would say you short it through this low here. So tactically, you short it through 680.23. Next real level on the support side right here is 659. Okay, you have a point of reference right here, which is 678. So I would say what would be great is if it could go sideways a little bit right here and then put in a bear flag and show you that it can't take back half of this bar, and then you could short it through this and through this. And you know, the 100 days and down to 615, and on Google's, you know, soft earnings, it went all the way to the 200 day. So at this point, I think you have somewhat of a double top. It responded very poorly to earnings. Little sideways action. I think your next short will be through the 680, 678 area, and then here is level 1, and then this would be a spot that I think over time is very doable. But again, Priceline is very tricky. It's very wide. It moves around very fast, so make sure you know what you're getting into if you want to short Priceline, because shorting Priceline has put a lot of traders out of business. But technically right now, it looks like it's ready to be leaned on and sell rallies and short breakdowns, especially if you see those divergences intraday.
We've got a lot of friends tweeting us right now about the banks getting hit hard in after hours. Cool Daddy asks specifically about JP Morgan getting hit after market. Are there any entry levels here?
Yesterday, I was playing for an oversold bounce, and JP Morgan was one of my vehicles I traded with the spiders because I always try and go best in breed. And the action today was horrible. Like, I came in long, tier 1.5. It was up at, like, I think 41.20. I tweeted it sold half. I was happy. I'm like, I sold a little bit more, and it put a low of the day in, and like at 40.06. I'm like, I'm out if it breaks that low of the day. And then all the banks closed weak. Goldman Sachs was even negative. So if you can't bounce on a bounce day, that just shows you there are lower prices to come. And if you look here at JP Morgan, still, let me take out the volume here just because it makes the chart a little cleaner for me. So remove volume. You will see that it's still working its way down. I put a target into this area first time I got here for a bounce trade. That's why I actually went long it. It's still above the 100 and 200, but look how it closed today. Markets tried to bounce, it opened up and failed. That's another negative sign that's showing you that it's not ready yet. So I guess I'm not sure where it is after hours. You have 40.12, and then you have another level down here, 39.70. So 39.70, I think if this is any good, this would be a level to watch. But at this particular point, it's below the moving averages. So even if it bounced, I think I drew this line saying I'm not expecting much. So you need to know the difference between a cash flow trade and trading a swing trade. And I don't think I'm ready for any swing trades that I'm going to hold longer than a 1 to 3 day time period until we get down to 1320 to 1300, which I still think has a high probability of happening. So if that's going to happen, the banks can go along with it.
Well, speaking of the banks, of course, Europe is always on everybody's mind when it comes to them. And we have a question from Benham20 asking your thoughts on the impact of Europe, specifically on Citigroup and Bank of America.
Well, I just think that our banks are definitely prone to their misfortunes. Like if people are talking about nationalizing Spain's banking system or more haircuts, who do you think holds some of those assets? We don't have a big percentage of them, but a lot of our banks do, so it's going to affect our banks. And if you look here first at the XLF, you will see, again, technically it's been on I would say acting pretty well. If you think about it here, it gave you a signal to get out when it broke this rising little channel from the breakout. Then it came back up, sort of retested it. Today gave you some clues not to stay with it as it opened up and closed lower. You have the 200 day and the 100 day right here. So this would be a spot that I think you could rebuy the banks. And if you look all in all where we came from this year, not so bad, guys. If you think about it, this was October. October was the low here at 11. We went as high as 16, and we haven't pulled back that much. You want to put some of your Fibonacci retracements from, just say, this October low all the way to this high. All right, everyone's starting to cry and all, but this has only been a 25% retracement from the low that was put in place in October, not even 10 or 11 months ago, whatever it was. So the 38.2% retracement is actually 14.11 below these moving averages. So why not be able to pull back to here, especially considering some of the problems these banks could have? And what happened in Greece is, I was trying to explain it to everyone on my desk, just to give them a bit of a fundamental background besides technicals. everyone bent over backwards saying, okay, we're going to give you a bailout. Everyone's going to get a haircut, whatever it was, 75% haircut, which is a lot to swallow. So if you think about it, people are saying, okay, I'll take a 75% haircut for the good of Europe, so we can move on from this. So basically, the new gentleman voted in, said, you know what, that deal is done. We're gonna throw it out the window. We're not gonna pay any of it back. So all of a sudden, that's a bigger write-off. And if they do that, why wouldn't some other countries do that, or at least look out for a haircut bailout deal? Because obviously, Greece could do whatever they want. So I wrote a little thing today saying, you know what? They came out and the ESFS said, let's just hold back $1 billion. So we'll give them the $4 billion that out of the 5. Let's hold back $1 billion to make sure that they have to cut 10 to 13 billion in whatever it is they spend their money on paying the civil servants or whomever or government workers. So right there, so just to backtrack one more time, they need to make these cuts. Greece just said we're not going to make the cuts. So if they're not going to make the cuts, why give them anything? Say we're going to hold back the entire tranche. You know what? You can't pay your workers. You know what? You won't have the funds. So you got to play by our rules. So let Greece play by the Europe rules instead of them writing their own. So it's tough to put some pressure on, make them accountable for putting together that deal versus them calling the shots and making people that put good money into their bad money lose more, because then there'll be other countries to follow and that'll be more pressure on the banks.
All right, well, keep those questions coming, guys. We're going to just take a quick break. We'll be right back after this. We're back answering your questions on our Q&A forum. We're going to start off this segment with a question about Apple. Scott Stockpuka saying Apple lost a lot of love. What do you think? Can it go much lower than 558 in the near term?
Well, we're going to have to see what the market wants to do with it. In the last 3 or 4 days, it's been showing relative strength. If you recall, about 3 or 4 weeks ago, the stock gave us some clues that we were going to roll over. When we had that reflex bounce back up, stock didn't do anything. It was actually lower, and everyone was trying to make excuses that it doesn't matter. PS, it broke that 620. And then it opened up on earnings. Remember that? And they sold it. Didn't act well. And then it came back to that 655 level. And while the S&P and some of the other indices were making lows, it held. So I've been trying to be long Apple the last few days. But then, just like the market, you couldn't buy the strength today. I thought it would be healthy if Apple broke above 572, 574, held it to show that you could actually buy a little bit of strength for a move into resistance versus just buying it in the hole, and it somewhat failed today. If you look at the chart, you will see, this was that upper level. I remember a lot of guys were real happy with me because I said, we could be shorting this. I showed the 60-minute chart if it breaks below the 620, and you had a really nice move. And then remember this little red dog reversal right here for a move to retest that. So that was also pretty calculated. Came all the way down because everyone was worried about the earnings, went to as low as 655. Big gap up. What did it do? No love. You would have liked to have seen it go sideways and hold the gap up to show strength. Didn't do it. But since then, trickled all the way lower. So if you look here, just say on this day, this day was May 8th, so to speak. On May 8th, if you go take a look at the spiders, what was it doing? May 8th was right here, right? May 8th, yep, spiders made a new low versus the recent range, and Apple did not. You go back to Apple, go back to your May 8th, it didn't, so that became a good candidate that finally maybe it's starting to lead again. So this morning I drew this line saying, you know what, it'll probably be healthy, it would probably help give us a better energetic bounce if it could actually trade above this lower pivot to get up to bigger resistance around 583, and there was no love there. I tried trading it a few times today, and I lost money in Apple trying to be long, but there was no momentum. So I would say, if Apple gets below 568.44, I think you got to be careful. And then if the market does pull off, I don't think if we do break this 558 to 555, your next level comes down to the 100-day, which is all the way down at 519. If Apple were to hold above this level and show a lot of relative strength, if the market tries to come in, I think it'll help mute some of the downside. But what would accelerate this market to the downside is if next time we get a bout of selling, if it were to break this area, and go down to here, that would make it a bit quicker. And right now, you sort of have a downtrend being put in place where I thought maybe we would come up and retest it. We still might. We might bounce around for the next few days, but at this particular point, Apple has a lot to prove as a macro investment. It's only 10% off the highs after what has been, you go to your monthly chart, a historic run, and look where it is. So I wouldn't be so scared about it. Obviously, you want to take trades and sell into strength and be hedged, but you go to your daily chart, I think that all you need to do is have these levels written down, 555 to 558. As long as we stay above this level, I think you could try and stay long, but if we break that, there will be guys to short this, and then you could see a move down to 520 to 519, which is right there at the 100-day.
Speaking of playing Apple, we have a question from an investor who holds Apple as well as a lot of other best-in-breed stocks, as he likes to call them. He holds Chipotle, Las Vegas Sands, Ralph Lauren, Apple, Starbucks. He says his portfolio approach now is shaking his confidence. Should he sell green and reinvest later, or hold?
You named a lot of stocks that I wish you would have sold already somewhat, because a lot of them did show some sell signals. I don't think in a market correction, I always say you should not be in more than a tier one. Tier one in any of even the best acting stocks, because everything comes down during a market correction, and you're only in a tier 2 or tier 3 if it's technically acting well and you're in an uptrend. So you just named a lot of stocks that gave you some sell signals, okay, to get back to tier 1. But the problem is if you get flat some of these stocks, and then they readjust and you're not watching them, you never get back in them. Sometimes, you've sold Apple and you look great because it just pulled in 5%, and then 3 to 6 months later, it's at new high. So it all depends how you approach things. You look at something like LVS, everyone's like, Red Dog, why aren't you trading LVS? This was one of your go-to stocks in the beginning of the year. And I'll show you why, okay? Technically, LVS, okay, I was watching it very closely because of this tight pattern. This was something that was getting tight, so technically looked really good. You're talking almost 18 months of going sideways, holding higher. So I figured once it gets above 50, you're going to have a nice move. So if you look here, the lows of this was like 38, the highs was 50. So I'm like, you know what? About a 10-point range in here. So above 50, why not get 60 to 62? So you go, from here, the range, and then you double it up because that's somewhat of the measured move. And then, oh, look how this lines up. Went to about 62. So sometimes it goes above, sometimes it doesn't make it. So you look for a pattern here. So this pattern measured the distance, and then what you do is you put a short-term signal in there. Look at this short-term signal. It went above, okay, trying to make a new high, and closed lower. Obviously, it wasn't a blaring Red Dog reversal or a blaring outside day, but that's a sell signal, especially after a big move. So, and then it just never really recovered. On earnings, it didn't act well. It also broke. I was drawing this line from the breakout for a while. It broke this mini uptrend. And then we were talking about this 56 area that was trying to hold for a while. It broke below that. And now, so against this area, I would say you could try it, especially if you sold there. If you're holding it and you didn't sell any into this strength, then I think you have, you didn't really follow your rules. So just going back to a tier system, I was saying in this whole mess is tier 1. And then this is when you get to tier 2. And this would be a great, just say even example of getting to tier 3. And then selling some along the way, because this was a macro pattern that ignited with a micro setup in between it with this nice bull flag, boom. You even had a retest, so just say you missed this and came back and retested it. And then if you didn't get this sell signal, this was your next one, and now into this area, it's going to try and hold, but if it doesn't hold this recent pivot low here, because the casino numbers today weren't great, just say 50.64, I would say revisit the 200-day, which comes right into, we're actually really a little bit below. We're right at the 200 days right here, but that is another area. So between 48 and 49.50 should hold. This is your micro level to trade it against. And I think you mentioned Chipotle also.
Yep.
CMG, it's another one of those chosen stocks. I haven't heard a lot of people talk about it lately. You look here. Okay, look at this uptrend. I haven't drawn this in a while, but if you look right here, right there when it broke this uptrend. Look how clean this looked from here. Boom, 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 boom. You know, you had a support system right here that it engulfed this upper flag. This is one flag. Then as it broke this was your sell signal. This was your sell signal that if you've been holding this for a long time, you get out of some, okay? And then it went down to the moving average, came back, and what did it do? It retested it and failed. So you still have to follow your technical rules, even if you're going to hold some things long term. So you can see things. When Netflix broke its uptrend, you know, from 300, it never saw another uptick. So obviously, we'll see how these things work out, but just don't fall in love and fall asleep, because you'll wake up the next day and you know your partner might be out of the bed and out of the country. So anyway, that's the first time I ever said that little analogy. So
you gotta love red dog analogies.
There you go. So just make sure that you know it doesn't continue this trend to the downside. You know, it's still above the 100 days. So go back to it one more time. You know, what you want to do is you want to see some type of relative strength. Here's your most recent pivot right there. It reversed off here. But here's an area of resistance. If it can't get back above there, you have a high, a lower high. See if there's another lower high here, and then if it continues to, you know, develop this trend of lower highs, and at some point, if it's healthy, you'll see this descending channel like this, and then it'll break back, you know, to the upside. So right now, it's pretty healthy. It's probably about 10% off the highs, or maybe a little bit more. It's still above the 100-day, still above the 200-day. But if you were not committed and you were trading the intermediate trend, here was your sell signal, or when it came back and retested it there. Let's take another question.
Let's go back and follow up just on what you were saying about Las Vegas Sands, because Chartgirl asks, why haven't you revisited the casino stocks in the past couple weeks like you did in the first quarter?
Because they're showing no relative strength. I'm not seeing the futures down and all of a sudden LVS is up. I'm not seeing the futures down and LVS showing relative strength or WIN showing relative strength. I haven't traded WIN ever since we had that nice little move from like 118 to 130, because it never showed you that it deserved your attention. Yeah, there were little scalps in there, but it never was outperforming. And ever since that top in LVS and ever since it didn't act well on earnings, it's been just trickling and trickling and trickling lower. So it's giving me no reason. I wanted to buy it yesterday, you know, into that channel retest, but it didn't get low enough, and you know I wasn't so convinced because we didn't close well. We didn't have a reversal bar that it was the time to buy it. So maybe when we get down a little lower, if we get to some of my areas like a 1320 and it starts to hold higher as the market goes lower, I'll revisit LVS for more than just a cash flow trade.
Here's an interesting one and a different one. I would actually like to know the answer to this one. Leaf West, hey Scott, realistically, how many stocks do you have up on your screens at the open that you try to trade in the first 30 minutes?
It all depends on what's going on. You know, during this corrective phase, I've really narrowed my focus down to like 4 or 5, where I have like 2 setups. I have my active account, I have my swing account. So I have like 6 level 2s right here. I have another 6 level 2s right there that I could see the inside action going back and forth. And then I have market watch sections where I see all the sectors, so I see what's going green, what's going red based on the action. So lately, because of the corrective mode, I've only been in like 3 to 6 things. During the rally from late December through March, there were times when I had 15 long positions. And I remember, Leaf, you coming back, you're like, wow, Scott, you really changed your style. You're holding a lot of positions because it warranted. The VIX was low. Things were holding higher, you were having breakouts, and that's the way I love to trade the market, but the market's not always like that. So in a corrective mode, I just concentrate really on the leaders, because there's no reason to be in a second, third, or fourth tier stock. They're air stocks, they're out of the way. You know, during a corrective phase, you want to go with the best stock in each sector and see if they show relative strength and to see if that sector is showing relative strength. So lately, I've been really just looking or trading the spiders, trading Apple, trading Google, Amazon, sometimes LinkedIn, JP Morgan for the financials, every now and then Goldman Sachs. When I was looking at the ags, I was trading CF and some of those guys, but really nothing is blaring on me right now that I'm trading for more than a cash flow trade. And I don't think we're at levels where I'm going to start accumulating swing trades. I'm just trading for cash flow both long and short right now until I see more data and the market proves that we could do more than that.
Now, I think this pretty much also answered Cool Daddy's question here, but let me see if there's anything else that you can add to it. He's asking, how do you choose your go-to stocks? Sector leaders, favorites?
Well, usually the market chooses them for me. And I have a price point sheet which has about 18 stocks on it, and they do change. And during corrections, which we're in now, if you're not caught in it and you're seeing things clearly, you could see what holds up best. You could see if the spiders get down to the 200-day or the S&P gets down to the 200-day, what stocks stop at the 100-day? What stocks are showing relative strength? What group doesn't go down to where the spiders go down to, so that's a group you turn to. That could be the new leading group. What stocks are near their highs? What stocks are holding above their 10-20 day while the market's going down to their 200 days, so to speak? So typically during corrections, they uncover the future leaders, and they're always a bit different. Sometimes they're the names you know and you can go back to them, but sometimes some new ones come up, and then once they come up, you can go with them. And sometimes, during a rally, you could see what doesn't rally, which when Netflix broke down, when some of the other leaders started acting faulty, on a rally, they're like, wow, these stocks didn't act the same during that last little oversold bounce. They're going to have more downside. And like stocks like today, a lot of the cloud stocks are really weak on the face of Cisco. So right now the cloud stocks are a little faulty because of European exposure or whatnot. So sometimes on bounce days, you can see relative weakness and where to lean in short. So as of now, I think a lot of the best acting stocks lately in this little downturn, I would say, Apple is still holding higher. Amazon, you take a quick look here. I think Amazon, you look at this going sideways, not even attempting to fill this earnings gap. So this right now is in the game for if the market turns higher. Expedia also still in this earnings gap, going sideways, looks good above all the moving averages. eBay looks good near the highs while the market's all the way down here. So a lot of these right now are showing me that these still are worthy of your attention. Even though Apple is not great, it's still above the 100-day, where if you look at the spiders, it's already bounced off the 100-day, or the Qs. Let's see where the Qs are. The Qs almost got to the 100-day. So what you want to do is you want to find the stocks that are holding higher and that show relative strength during corrections, and those are the ones you start trading as you move forward when we get a new type of reversal or fledgling rally set up.
So, and touching on that advice, Sean Vision asking, Scott, how do you factor in news while using technical analysis?
Well, what you want to do is you want to see the news and then see how the market reacts to the news. Some news is priced in and some isn't. So just say like Cisco, people are like, oh, everyone wasn't expecting much out of Cisco. It's not a big deal. Okay, then why was it down 10%? It would have opened down and it would have went positive. Sometimes you have good news, same way with LinkedIn. LinkedIn had a great run into the highs, and it was sold, so they factored in this good quarter, and now you have to wait till the next quarter. A lot of the news out of Europe was factored in. Everyone was saying, okay, we're okay with deficit reduction. We're okay with austerity. And then as soon as the new news came out saying that Greece says, I don't like that deal anymore. I want to start spending again. Or we get, oh, you know what? Let's get Sarkozy out. I want the new guy who's going to tax and spend. Everyone's like, oh, that's new news. Let's see how the market responds to it. And it didn't respond to it very, very well. So that's when we start technically breaking down. And that's when you had to say to yourself, you know what? This could be a little bit different right here. We might not, hold, the recent lows. We could go lower. And especially if we start seeing more news out of Spain, which we're starting to hear, or we've been hearing, and then Italy. And then I still think that France is going to get a downgrade very soon. So that'll be the next piece of news we need to see whether it's priced in or not.
And finally, a very good one to end on, MSP Zoom. Scott, what time do you go to bed at night and wake up in the morning?
Long days. Well, I just moved to Short Hills, New Jersey, so my commute's been different, so I've been playing around with it. But typically, I'm up at 5. I'm on a 6 o'clock ferry. So I get in by 6:40. I put together my note. I put together my work, and then I come in here at 7:15, do the morning call express, morning call, back at my desk at 8:30. Start talking on the radio, start talking to the community, start putting my trading plan, realigning it. 9 o'clock we do another call called the Trader Roundup by Sperling, and we trade all day, and then every night's different. But typically on a good night, I like to put my son to sleep at around 9 o'clock, and sometimes I'm asleep before him. And he's like, Daddy, stop snoring. But anyway, typically I try and be asleep before 10 and 11, but I'm up real early. And then on the weekends, I've been training for the Ironman, so I'm still up at 4:30. So if you follow me on Twitter, you see I start tweeting sometimes at 5 in the morning, and I do the same on the weekends. And I'm just moving along, and my ADD kicks in, so I always have to be busy.
And yes, and on that note, follow Scott on Twitter, follow me on Twitter. Keep sending those questions in, and we'll see you right here next week. Have a great night.